Just the whole of last year, it was a year of bearishness. And I believe that many of us have forgotten about that. And at the turn of 2023, suddenly the market became bullish. And there are three reasons attributed to this first and second quarter of this boom. Number one, it is the beginning of the AI rush. Number two is that the inflation appears to be taming. And number three, the March bank run around here, it also seems to be under good control for now. And today we're going to study how to time the next big move or a change of trend using these four indices. And you may also notice that the rest are up, but the Russell has been trading sideways throughout the year. And how are we going to apply that to time the next major trend? And before we study into this, please do take some time to read into the disclaimer. And what we're going to do here is we got to understand about trend, and we're going to study about how to identify a classic uptrend line. Now, why a classic uptrend line? It is so important because once it is being broken below or once it is being compromised, it means that the change of trend may come. And for that reason, we're going to study into the year 2022, last year, and why on the third week of 2022, I was very bearish for the whole year. And generally, the whole strategy for last year, it was sell into strength. But how do I develop that it was a bearish year? Now, on a uptrend, charting of uptrend, there are two rules. The first rule is that we have to find at least three significant troughs. The rule number two is that then we try to do the best alignment of these at least three significant troughs. And again, why on the third week I was bearish last year? It was because of one trough, 2, 3, 4, 5. Let me just draw this. Find at least three. Then you do the best alignment out of at least three. Now, what I saw here is that there were 1, 2, rested at the close or opening, at the low, 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 low. So I'm saying at least 1, 2, 3, 4, 5, 6, 7. This became a very classic uptrend line. And on the third week of 2022, I saw that it broke below this classic uptrend line very convincingly. And for that reason, technically, I'm saying that there is a reason for me to sell in strength in the whole year of 2022. And not forgetting to combine the fundamental reason, because it was also the beginning of the rise of inflation, and CPI was generally much higher. And that was last year. Now let's go back to all these four major indices. Now we understand how to identify a classic uptrend line. Let's study into S&P, Dow Jones, and NASDAQ. Now let's start off with NASDAQ first. At the turn of 2023, we saw that it supported once at the low or closing, at the opening. So at least I saw three support. And I connect the dots and I project upwards. So this is a classic uptrend line. It means that if any time you start to compromise below, this could be the timing. How about S&P? Similarly, we saw that it rested at the low here. It rested at the closing and the low. It rested at the opening price. So I'm seeing at least three as well. And I liked Dow Jones because it's more than three significant troughs. And we're seeing rested once, twice, 3 times, 4 times. I say at least three significant troughs. Now, what could be the event that caused the market to turn down? I'm suspecting that the inflation or the fear of inflation, it is not over yet. For that reason, let's study into the US interest rate. And what we're seeing here is the US 5-year yield. And over the last 40 years, since the 80s, now similarly, I'm going to change the strategy a little bit, but the concept remained the same. How to construct a downtrend line. The concept is the same. Why? Because instead of looking at three significant troughs, I'm looking at 4 three significant peaks as well. Now, at least three. I'm seeing one over the last 40 years. And what we're seeing here is the quarterly chart. 1, 2, 3. And I try to align them together. During last year, during the first quarter, as you can see here, that was January 2022, I'm quite certain that inflation is on the rise, but also the interest rate will be on the rise. It's a change of trend for the interest rate. Interest rate at the point in time, I'm quite convinced that it will move higher. So we could see that on this quarter, the first quarter of 2022, it broke above this downtrend line. And what I'm seeing here that I do suspect that the inflation will be on the rise still. And because also technically I'm seeing that the interest rate trend, the yield trend has broken convincingly this classic downtrend line. Now let's go back to look at the Russell. And we have studied about S&P, Dow Jones, and NASDAQ. Let me just explain a little bit about Russell. Now, what is Russell? Russell is Russell 2000. Russell 2000, it also means that there's 2,000 companies that consist of this mid-size indices, the SME of listed company in the United States. And I suspect that they also employ the largest workforce in the United States. And their employee getting a monthly paycheck, it also represents the mass consumer of United States. If the indices is down, it means that SME are not doing well. It also means that the mass consumer may not consume as much. It also means that recession may come. In the context that if everything is well, it will go up. So that's good. How about in the context of when everything are not doing that well? Because of the risk of higher interest rate, but of course that before that will be higher inflation. If this risk happen, so what happened here is that the timing, it could be either one of them. If the Russell break below this range, again, what happened over the last 2 years for Russell, why it range is because SME are not doing well. When the market range, it also represents to me that they have no idea where the main trend is going to be. But once it broke below, it will give me a signal that the rest of them may also follow suit after that. Now, what happened to NASDAQ? As it broke below, this could be my timing, that since the beginning of 2023, my strategy is to buy on dips for my short-term to mid-term trade. But moving forward, any timeline where it starts to break below, my strategy for the rest of 2023, it will be sell into strength. So similarly for S&P, if it appears as such, I will know what to do next. And how about for Dow Jones? This is what my plan will be. I'm not suggesting that it will all come together, but either one of them come first, I will know exactly what to do here. Now, what are you seeing here at this point in time? I know that I'm painting you a very gloomy picture, but I do not want you to see that as a risk, because my proposition to you is this. If we know what is the risk lying ahead of us, which I just explained, to me, we should see that as an opportunity, but not risk. I always enjoy studying the correlation between the markets and to uncover potential opportunity. And I hope today's sharing, it will be helpful in how we invest and trade. Feel free to leave me any comments below. I love to exchange ideas with you. Really happy that you stayed through this tutorial. You have many great trading weeks ahead.